have an uptrend on that. It's higher consecutive higher highs and higher lows, right? So we've got a bit of an issue here. We're not quite past the supply. We do have an uptrend here. So which one do we go with? Well, in this particular case, I would say since the sellers are telling you that it's a bit, bit weak in here, and the rising uptrend here still says it's the buyers are buying and willing to buy at higher prices. I still think we need to go with more of the long opportunities in this particular case, right? Um, with that being said, though, since we are still up supply, I would encourage you to have a target, a first target that is rather, you know, kind of conservative. In other words, maybe take it at a 1-to-1, 2-to-1, put a little bit of money in your pocket, and then allow yourself to, maybe let the remaining position run. So with that, all that analysis, what am I saying here? I'm saying here that your first question, Joe, okay, about that zone, I think is a very important zone. I think if you're looking from the short side in the short direction, that you've got to deal with this. I would say if you're looking for that short, you need to see that break that area first, because this is the area that basically created this fair price value area. See a lot of fair price value in here. Okay. This is the area that basically is the bottom of that floor, if you will. Okay. Does that make sense, Joe? So I would certainly, this is a contender here. In fact, I would even recommend, if I'm trading on Sunday, that this potentially could be a long opportunity. Now, albeit probably more of a confirmation entry, but yeah, that's certainly a force to be reckoned with whenever we're looking to short. So I would need to see this kind of get past. In fact, if I'm looking short, I would actually need it to get past that area as well. So for me, even though we have a beginning of a short-term downtrend, I would need to see that kind of break those areas for me personally to start to get biased, because that officially then takes out that daily uptrend. Okay. Does that make sense, Joe? Now, the other question would be, you said, hey, you know what about the zones? If I'm looking to get short, what would be the better zone? For me personally, I would say it's got to be at either the extreme. To me, it has to be in an extreme. So this for me would be a better zone in this current outlook right now, because that's higher up. That's at the top of where the sellers have control. But you're going against that uptrend in that particular case. So that would also be a confirmation for me. But personally speaking, if we dropped from this area and took out these demand zones, then that might change, and that might make this a better area for a shorting upper knee. Does that make any sense to you? In other words, if it dropped from here, like very aggressively dropped from here and took this out, then that would be your controlling area right there within that daily supply. So that would be probably the better opportunity in there. Yeah, exactly. So we have to not analyze just trend how it is, but trend how it's going to be. Does that make sense? Anticipatory. One of my instructors, a guy named Gabe Velasquez, told me that a long time ago. You have to anticipate the trend. Okay. All right. Joe, hopefully that answered your question and you got some good feedback. Thank you for submitting that in there. And yeah, thanks, man. All right, let's move on to the next one. The next one is also from Joe. Okay, so Joe, looks like this is a trade that you took in soybean oil. And it looks like in the soybean oil, you kind of got fried on this one, right? No pun intended. All right, so I can see what you're doing here. All right, so look in the long. So let's take a look at where this trade actually occurred. This occurred on April the 30th. So let's go to our charts here. I'm so punny, aren't I know. Same bad jokes, right? Same bad jokes. No matter when you've met me, it's bad jokes, right? Okay. All right, let's go to the 30th. This is actually, no kidding, this is actually how I review my own trades every week. Okay, I actually go back in time. TradeStation has this function. TradingView has that function as well. I actually go back in time and I analyze what I was looking at beforehand. Okay, so let's look at this 240. Look at the 240. So what do you see here? You obviously see a pivot area here. Okay, but that pivot area looks like it's a response to this fair price value area. Does everybody see that? So if I'm wanting to buy, I need to either break or penetrate very, very deeply this area of supply. Does that make sense? So I don't know if I would be buying if it broke just above the 26. I need to see probably a pretty good evidence that this has some. In other words, this picture is still telling me what's in control right here. Who's in control right there? The sellers are still in control right there. Make sense? They're still dominating that area. They're still pushing price down. Now, granted, if we get deeper into this, the sellers are getting weaker. But again, don't don't back off of the fact that you still have established sellers in that particular situation. Fair price value is just basically, where the price has been very concentrated. The buyers and the sellers are agreeing, basically in areas like this, they're agreeing that this is a fair price to them, right? So who's dominating here? Nobody's dominating until what happens is the price breaks that area and drops. That tells me that the sellers are more willing to sell from here. Make sense? Right? So that's a fair price value area. Okay. So yeah, it's a battle area, right, Jay? It's a battle. Boom, 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 boom. So here's the thing. So if we come back up, so let's go to the day that this trade occurred, which was on the 30th, right, Joe? All right. So I would see what you're looking at, right? You're looking at this thing. It's breaking above this pivot area. It formed a, I mean, hey, that's a decent area of demand. Would we agree on that one? I mean, that's a decent area of demand. You've got that short-term uptrend. You've got a nice little area. I mean, I personally, when I see situations like this is a level on level, base rally, base rally. I tend to go to the more distal area, but it's still the same idea, right? Okay. Now, the only issue with this, Joe, right here is that you ask yourself this question: are the buyers in control here? I think it's fair to say that, yeah, you could probably say that there's a bit of control going on here. They're starting to dominate the picture. But here's the second question you got to ask. Okay, okay, good. I like that. Here's the second question you got to ask. Did that move away give you enough profit margin? In other words, we've got an uptrend. Okay, we formed a zone. Do we have enough space to make profits on this one? And I think that's the only issue that I actually have with this particular setup. I don't feel that I would have enough space because I haven't taken out enough sellers. Does that make sense, Joe? In other words, I would have had to have, I would have probably needed to see this be maybe a little bit bigger candle. Because if I have it to be, if I have it a little bit bigger candle, that at least shows me that there's a little bit more dominance there by the actual buyers, and I'd feel a lot more comfortable in that situation, right? Okay. So another one of my instructors always told me too. She said it's like a snow plow. When you see a price move up, you kind of get away. You got to move the snow away so you have a clear path the next time you drive through. That's kind of like buyers and sellers, right? So this pushing up is clearing some of these sellers out of here. But you got to ask yourself this question: was there enough clearance? Right? Was there enough space to make money on that particular setup? Okay. And I mean, again, I don't think it's a bad setup, Joe. I think you were looking at the right things. I just don't think you had enough profit margin on that situation to do that. Okay. Yeah, Chuck. Okay. Fair enough, Joe. Any questions for me on that? If you do, I can unmute you here. Okay, good. All right, great. All right. Again, hey, thanks. We appreciate you putting that in there. Okay. Okie doke. Who do we got here? This one was. Hey, Sean, are you in here? Hey, Sean, how you doing? All right. So looking at now, this was a winner for you, wasn't it, Sean? Yeah. Uh, this is a very similar trade to what I took this week as well. I actually went long the Aussie and shorted the Aussie all this week. So both were nice winners for me on this situation. So I like this setup obviously because I already took a trade on this and I won. So let's take a look at this. So obviously I'm going to tell you that this was an excellent setup. Like, the guy in Rayman, right? Excellent. This is excellent setup, excellent trade. All right. So we were here. I think this was, yeah, right here. What day was that? That was the start of the week. Excellent chart. Excellent. How many toothpicks did he count? 848 toothpicks. What a classic movie, right? Okay. All right. So this particular setup, again, if you look at the bigger chart here, okay, so daily. Now, here's what's interesting about this one, right? So take a look. You have a little supply up here, right? So you have a little supply. You're getting very, very close. You do have an uptrend. Okay. Now, here's the question. Okay. And this is the question that I also asked myself. Does that pivot really count? Got to watch Wapner. Got to watch Wapner. So does this pivot really count? Like if I'm taking a trade, am I worried about that pivot? Yes. Ian saying yes. Giovanni saying no. Fibershed no. Okay. So I'm in the no camp. And here's why I'm in the no camp. That little pivot to me is just a pivot. It did not demonstrate anything of significance for me in this particular situation. Now, if that pivot would have produced a bigger move down, taken out the trend or taken out some area of demand, does that make sense? I probably would have considered that. But for me, that demonstrates what? That demonstrates just to me that the sellers here are strong. That's all that demonstrates. And that's just dipping into this pool of sellers before it drops. As opposed to if this has a big move down through there, then I can say that a bunch of new sellers pushed into here and pushed that down. Does everybody see the difference? We've got residual sellers pushing it down, or we've got new sellers pushing it down. Okay. What difference does it make? Well, the difference is if I got new sellers in here, I've got something to contend with. So on Sunday, I was actually looking at this as well. I was saying, hey, we've got this uptrend. We've got a little fair price value area building. If it breaks above here, I'm going to be going long, but I'm going to be taking targets rather quickly. Why? Why would I be taking profits very quickly or more quickly? Yeah, look at that big guy. Look at that big guy. You don't want to mess with that big guy, right? That's the Rock sitting there. Okay, that's the Rock. You don't want to get past Kevin Hart and then deal with the Rock, right? So yeah, so looking at this, so I like this setup, Sean. I did like this setup. So take a look. So do we have enough evidence? If you're taking a long, do you have enough evidence right here to build a case for a breakout trade? I mean, do we have enough touches here? Again, I don't know you guys' rules for a breakout trade, but for me, if I see some gathering underneath the breakout point, that's good enough for me most of the time, right? However, I don't really take a lot of breakout trades. For me, this was a pullback trade, and I can show you where that happened. But let's take a look as it progresses. So let's go to Tuesday here. Okay. So look what that did. So we based, we rallied above there. I think Sean took it on the breakout. Was that correct, Sean? Yeah, so that's a good point, Sean. You said it looks like the soybean trade, but there is a difference. It had a little bit more room to run on that, didn't it? It had a little bit of room in that context. Okay. All right. So that pushed up. Okay. So we break out. So nice little breakout trade on there, Sean. I got in here. Okay. I got in on this one because it never, I highlighted this area and I still highlighted this area. This is one of the trades I put out for Fridays on the trade worksheet. I had this area highlighted, and then when this zone formed, I took that one as well. Okay. So that was a good setup on that, Sean. And then I like what, then I reversed right here. So then I literally versed it from that area. Okay. So I bought here, took it up to here, took profits here, and then shorted on the way down. So that great trade, Sean. I like that. Okay. Any questions for me on that particular setup? I don't see any that you listed. Breakout trade. Good. Okay. And any questions for me? No? No? Everybody else good? All right, good. Comments, questions? Remember, part of this is about helping each other get better, right? What was my target on the short? My target on the short was actually here. My final target on the short, I had a right here, which had just squeaked out on Friday. And then I was looking to buy. Unfortunately, on Friday, it basically just did nothing until more toward the end of the day, So yeah, it just barely squeaked out that target. And then it just basically sat there for most of the day. I was kind of hoping it would drop, hit my target, and then I'd try to take a reverse for more of a day trade. Okay. Could you explain, please, once I was looking at the zone you referred to in the trade idea, could you please explain that once more? I was looking at the zone you referred to. Oh yeah, this zone here. Yeah. So for me, this is just, again, this is with that uptrend, right? You can see here, that is the kind of the controlling area. So we're starting to get into the controlling area. This was the breakout point. And look what it did from there. Do you see, did we create some space now to take this long to the upside? Did we create some space now to make some money if we buy here? Yeah. But the problem I said was this is a confirmation, right? This is a confirmation trade because of the fact that now the sellers, what did the last 2 days show you about the sellers in the Australian dollar? Yeah, I would do that, user. Okay. So what did they took control. They said, hey, buyers. Right? They took control. They started to push that market down. And that's important to understand that. So I said, hey, you know what? Why don't we do a little bit of a confirmation on this? Because I'm not a very, this kind of a structure is kind of a sloppy structure for a demand area. And it didn't really move 2 times away. And I got that supply zone right there. So I'd be safer to take a confirmation. And I would do that on a 15. I would actually go from the 60 to the 15 to the 5, depending on what I'm getting from the market. Okay. Okie doke. Okay, good. Good. All right. By the way, Chuck, if you have anything to comment on, if you see anything, different set of eyes is always helpful. So
will do.
And you guys are always free to comment as well. Got it? Okay. All right, let's look at Aman. Did I say that correctly? Aman? Are you in here, Aman? Amon, hey, how you doing? All right, so you're looking at the SPX, okay? Looking at the SPX, looking at this long. So this is not here yet, correct? This is a trade that you're looking at coming up this week. Okay, good. All right, so we're looking at the 2785 area long. Your rationale charting timeframes use the 60 for the bigger time frame in the 1 minute. Strong level, okay. 1 minute chart to validate based on a 2-to-1 reward to risk ratio. Okay, so let's take a look at that. I've got this because I don't have the SPX 500. Where did I put that? I put that over there. It is. Okay. So you're looking at this area here. Basically, I'm going to circle the whole area because I consider the whole area to be that controlling, basically that controlling pivot. Okay. Now, with regards to this area, if you're using the 60-minute for your particular context, yeah, I would have to agree with it that this is a controlling area that is going to be important. Okay. So with that regard, yes, we do have a downtrend on the 60. So we have to ask ourselves this question: is this a good or strong potential reversal point? Well, let's take a look. So we had this drop base, and here we rallied, pulled back, and then we rallied, hit the first area of supply, the top of this range, and then we rallied from that particular point. So with that kind of a structure, I would say yes, that is the overall controlling area. Because again, let's look at price structure here. What is price structure? Okay. Fiber shed, whatever the market's really offering me, but if it's an aggressive, if the bigger context isn't offering me a huge profit margin, I'll usually take maybe a 1 or a 2-to-1 reward on the first profit target and not let the remaining position run till the bigger time frame. Okay. So can everybody take a look at this real quickly here? What does this price action tell you here? Think about what you got going on here. You got a drop, you got a base, you got a rally, right? You got a drop, you got a base, you got a rally. What is this telling you? What's this overall structure telling you is happening here? Yep. Yeah, it's showing you that the buyers were trying to take control from this area. Now, here's the other thing. Let's look at the bigger picture. Let's look at the bigger picture. Let's go to your daily time frame here. I'm always a big fan of the daily time frame, no matter if I'm day trading or whatever I'm doing here. Okay, let's look at that daily picture on this. If I'm looking at the daily picture here on the SPX, okay, what does this tell you? Do we have predominantly buyers in control right now? You know, you got some supply here, right? Do we still have an uptrend? Okay, where would be by definition no more of an uptrend? Would it not be below the 2724 area? Yeah, right? See my point? So would Amon's trade here, would that be a smart area to look to buy? Yeah, of course. Right? Of course. So if I'm day trading, I'm doing the 60-minute thing, I'm doing the 1 minute thing, and I have a zone, which is right here, that is inside of a daily picture of demand, inside of an uptrend. Would that give me more odds and probability on this setup? Absolutely. Absolutely. So, Amon, yeah, I mean, Looks like you're going to confirm this anyway. So I think that's, a good idea, a good trade area to probably engage, um, with your trades. Now, keep in mind though, you do have a beautiful downtrend on this 60 developing. So you do have good supply sitting right here. So just be aware of that as it comes back up. Does that make sense? Yeah, exactly, Joe. That's what I was just saying there. Okay. Okay, good. All right, good. Anybody else? Oh, well, that's kind of you. Amen. But you keep all the winnings because you're going to keep all the losses as well. You know what I mean? I want to be fair here. Oh, 95.5. I'll take that, right? I'll take money's money, right? Okay. All right. Hey, and thanks for putting the trade in here. I like when people, put this stuff out there. Okay. All right. So let's close that. All right, Liz. Now I know Liz submitted a trade, but she is on the golf course. I actually wish that I had Liz's life out there just trading, out there just golfing, you know, you know. I mean, yeah, living the dream, right? All right, so Liz has a nice little short that she took on the Russell, which again, this was a great trade setup. She notes that this was a gap and go, which is another. That's actually one of the few ways that I actually take breakout trades. By the way, um, I kind of joked on social media with Chuck, about not having a good breakout methodology, and I told Chuck to teach me, and I put not chunk on there. What was the what's that?
Breakouts are all I got, brother. I mean, I'm like a one trick pony.
So, I kind of making a joke of pleading to Chuck to be able to teach me the breakouts. Cause I mean, I do have a breakout methodology, but I don't use it very often because I've never felt 100% comfortable with it. But the one place that I actually do feel 100% comfortable with, breakout wise, is a gap and go. So gap and go is actually really great when the situation calls for it. So this was Liz's gap and go trade setup. Okay. You can see here, I'll blow this up as much as I can here. So look in, she clearly had in the 240-minute time frame, what was the trend when that was happening? So keep in mind that the trade was right here. So what was the trend like? So we broke the first area of demand. We broke a second area of demand. We actually had a downward momentum, downward trend at that point in time, right? So when the market opened up, okay, she opened up and then she took you can see the context. Prices reached a higher time frame supply, big gap down today on the day session. She waited for the pit to open, took the price action, and she said the only thing she really did wrong was she traded 6 contracts instead of 10. Yeah. So let's take a look at why that was such a good trade setup. Okay. And this is one I actually didn't pay attention to. I don't always pay attention to the Russell unless I kind of really have a good trading idea. Let's look at the Russell here, and let's take a look at what she was looking at here. Okay, so here's the 240. Okay, so let's look at the day before. What was happening? Okay, what's happening here on the Russell? So we're really trying to break down. So here's our big area of demand. Do you see that on the 240? So if we get below this area of demand, actually there's 2 areas of demand. If we get below these areas of demand, okay, after a big drop down in price, take a look at again price action, rally, base, rally, base, rally, and then what happens? Base, big push down, right? So it's fair to say that at this moment in time, what should you be looking to do? Buy or sell? That was a trick question, folks. This is clearly a buying opportunity right here. Okay. Clearly a buying opportunity. Yeah. Chuck's got it. Right. Because why? What do we have? We have an uptrend. Now we do have what? You do have a slight little cue that there is some sellers coming in here, right? Yeah. Now that is important because if you take a trade out of here, you better be looking to take some profits in and around that area. Do you see how the big picture is telling you what to do here? Okay. The big picture is telling you what to do. Now, anticipate. What if it doesn't bounce from here? What if you wake up the next morning and it's somewhere down in here? Uh-oh. What if that happens? Yeah, now we should be looking on the short side. Does everybody understand that? Because we've put in some sellers, we put in some supply, and we have broken some demand. That's starting to tell you what? Aha. Starting to tell you that the momentum and the trend may be shifting. So let's take a look at what Liz was looking at the next morning. What was Liz looking at the next morning? Well, let's go down to a 60-minute chart so you can see that. Okay. So literally we have a gap down from basically from the close on Thursday to the reopening Thursday night. We have a gap down. And then we base and we break. And what did we break? We broke that first 240-minute zone. Make sense? And then what happens? And then as you guys are sleeping, we base, we drop again. And what is that now doing? That is literally trying to, it's penetrating very deep into this area of demand. Now, here's the moment of decision that you have to make. Is this area of demand going to hold? Could you possibly have both a long idea and a short idea from this particular setup? Yes, you definitely could. There is probably equal reasons for both trade setups right now. Okay. Liz decided that she was going to go with the momentum of this particular trade setup. So she decided to go with this newly forming trend here that is having. Yeah. Yeah, absolutely, Giovanni. This would only be a confirmation. And what did she do? Well, here's what she did. So a gap and go. How many of you guys know? I should say this. How many of you don't know what a gap and go is? Okay. Let's take a look at a gap and go. This was a pretty nice little gap and go. Okay. So what we're going to concentrate on is obviously the 9:30 Eastern candle, Eastern daylight savings time candle right here. So it's going to be right there. So that was when the market actually opens up here. Okay. So that's when the market actually opens up. So let's go to a 5-minute chart. Okay. And let's go to the day session. So I'm going to transfer this chart to just the pit session or the day session. Okay. So look at what you have here. So this is a fairly clear picture of a potential gap and go breakout trade, right? Take a look. First 5-minute candle. So my gap and go is on a 5-minute candle. I know what Taylor Frame, he was talking about 15. He does the 15-minute. I usually do the 5-minute when I have the particular context, right? So take a look. First 5-minute candle, what do you have? You got a high and a low, correct? So we already looked at the bigger picture context and we decided that we could go. The bigger picture does tell us that there's a lot of evidence to go short, correct? We got a lot of momentum, trend is shifting, got a big gap down. We're breaking some demand areas. So the bigger picture is telling you, you could look short, okay? Now the 5-minute is just a way to get into it. So the opening range breakout or gap and go is just simply, hey, first 5 minutes, you got this 5-minute candle. Okay, you wait for either this area to break, so the top of the candle to break, or the low of that candle to break. Since she was looking short, what did she do? She took the low part. So she probably entered in somewhere in around that area. Everybody understand? And then what happened is it just rocked and rolled from that point, finally taking out the remainder of that demand, right? The remainder of that area of demand right there. Okay. And took her profits and went home and played some golf. That's it's a pretty phenomenal trade. Gap and goes are a phenomenal setup when you have a very strongly trending market. And I know that Chuck is very much a strong advocate of trend. Me personally, I'm a strong, I actually look at, to me, I actually play both the curve and the trend. And I have particular trades that I do in either situation. Um, but one of the trades that I always that always takes me is when I have a strong trend and I have strong momentum. It's a gap and go is a wonderful setup for you to do.
Hey, Justin.
Yeah.
So where I'll add the gap and go conversation, where I think that I find the most valuable gap and go trades for me personally, and for a lot of people that have joined our Sunday night trade rooms, are the Sunday night gap and go on the equities or the currencies or the commodities when they open up on Sunday night from that first 60-minute chart. So I use a 60-minute chart gap and go. And if we get above the high of a 60-minute on a gap up, then I'll be able to let it run. Or if we get below the low on a 60-minute of a gap down, and I use the 60-minute candle. And sometimes those will run for 2, 3, 4, 5 days in a row.
Oh, nice. Yeah, I mean, because again, like, I mean, Bob Dunn. I'm a big fan of Bob Dunn. He would always say, let those waves run, right? Catch that wave and let it go. And that's what a gap does, right? A gap is again excess demand or supply telling you, hey, we're willing to buy in this direction, right? So if you can get on board with that, right? To answer some of your questions, the stop losses, me personally would always be on the opposite side of the candle. So a stop loss in this case, and sometimes that can be tough because if we have a very volatile open, which a lot of times you do, it could be a bit wide. But yeah, stop loss would be just on the other side of that. Give it a little bit of wiggle room, whatever you want to make it. But that would be a proper stop on a trade setup like that. Anything that people try to skirt the loss potential and like, oh, that candle's too big, I'm going to put a stop loss there. So they'll literally take their stop loss and they'll go, okay, right in the middle of the candle. That's not going to do anything. All you're going to do is get stopped out a lot of the time, and that's going to go in your favor. So other side of the candle is good. If you can't afford to do that, either don't take the trade or trade, say, micro contracts or something like that. Okay. Yeah, Kelly. All right. So Liz, hey, thanks for sharing. Looks like you had a really good setup right there, and hopefully your golfing is good, and you didn't hit it in the rough, because that's tough. Put it in the fairway, put it in the short grass, right? Got to put it in the short grass. All right.
I'm just happy when I put it in the grass and not in the trees.
Yeah. I don't know. It's been a while since I've really played golf, so I don't know where that's going. I don't know where my balls are going anymore. All right. Man, that sounded really bad. Let's just move on. All right. Final trade to review from our pro members here. Vincent, you in here? Vincent. Hey, good morning, Vincent. All right, Vincent, looks like you had a trade set up here on the NASDAQ. I'm going to make a confession here. This is a trade that I also got stuck. Actually, what's this trade that I put out? I think I put this one in the worksheet here. It was either NASDAQ or the S&P. I can't remember. I think this was that trade setup that I put in the session, because this was it was a good setup. It was a high probability setup. And we'll just take a look. So your zone was at 88.35. Let's go to the actual charts, because I want to explain 428. Let's go to 428 here. John, it's just in the all you have to do is go to the calendar in your membership login, and it should be right there on the calendar. You can just log in. All right, NASDAQ here. What we were looking at on, that was on the 28th. Why did that not go to the 28th? Oh, well, that's why. You gotta be in the right month, Justin. Gotta be in the right month. Okay. Here's what I'm sure Vincent was looking at. And by the way, Vincent, if you have any comments on your trade setup, you feel free. We can unmute you. But I'll speak for what I was looking at in this situation. Okay. Looking at the NASDAQ at that trade setup. So what do we have? So do we have supply here? Yeah. Do we have clearly weakening supply here? Yeah. So what do we need to go long? What we need to go long is we need to see some evidence by the buyers that they're coming out to play. Make sense? So where would that be? Well, again, that would, to me, again, here's this pivot, which is right at the tip of here. So basically right around this 89.66 area, basically, I need to see. We also have another minor little pivot right here, that again, if we're above, so this taking out the 87.90 and then maybe the 9,000 area, that'd probably be a pretty good situation for us. So let's take a look at what we're looking at. Okay. Here's, first of all, we do have some basing here, which is beginning to make the case. What does the basing tell you? That's some fighters. That's a battle going on. Make sense? That's a big battle going on. So if the buyers win that battle, it's going to push up through. If the sellers win that battle, it's going to push down below, which confirms that the supply is still strong here. Okay. So let's take a look. Let's go to the 28th. Okay. All right. So what's happening here? So the market bases and it pushes down and then it rallies here. Okay. So did it form a couple little areas of demand on the way up? Yeah. Do you blame Vincent for looking at this as an opportunity to get long? Do you blame me for, no, I mean, I took the long here as well. I took the higher zone though. Vincent, I think you took the lower zone, correct? Doug just like, yeah, you can blame Justin. Did you take that trade too, Chuck?
Yep. Yeah. All the setup said it was a good opportunity to go long. So it was a small stop out.
Yeah. Yeah, I agree. I mean, I don't think there's anything wrong. I mean, I think we can look at that in retrospect going, okay, there was a little fair price value area here, right? So did it really get through all that? Well, it got through most of it, right? So I think, could we have said maybe we're trying to get in a little bit early, maybe too aggressively? I think that's the review that I did that evening. I said, well, maybe I should have waited a little bit more. But again, you have an uptrend here. You've got bigger picture evidence that we could go higher. Yeah, I mean, that's kind of that give and take right there. I think it was the end of the month, supply just above. Do you think funds just took profit? Possibly, Melissa. I try not to think like that because I'm not that smart. You know what I mean? I mean, I just ask Jenny what she thinks, and then I take those trades. So no,
I like trades that are run, man.
I like running. What should you do with your last target? Running. God, it's terrible. It's really terrible. Me and Jenny was at peas and carrots again. Yeah. Anyway, so getting back to what we're talking about here. Vincent, I don't blame you at all on that particular setup. We're looking long, good trend. It's just the sellers came out, and sometimes the market just doesn't cooperate with what you're looking at. The only thing you can control is what? I tell you what, write this down. M plus T equals O. What does that mean? Market plus trader equals your outcome. Guess what the only one of those variables you can control? The only one. Yeah. So the only thing you literally can do, the only thing you can literally do is control your process. That's the only thing you can do. Sometimes the market's not going to cooperate with you, right? And even if you do exactly what you can do, the market doesn't cooperate, you're not going to have a positive outcome. But you'll make sure that you have a relatively small stop, right? Or loss. Okay. If you never control the trader, you have no potential positive outcome because the market will destroy you, right? So if your outcomes aren't the way that you want, you need to look here first. Vincent, I think you did the right job or right opportunity. You took the trade. Probably most times, more times than not, that trade's going to work out. Okay. Sure, Giovanni. Let's see here. Can I unmute you here? Where's Giovanni? Let's unmute you. Yeah, go ahead, Giovanni. Why aren't you unmuting here?
Hello?
Oh, there we go.
Hey, Jess. With the pink lines were the daily, right?
Yeah.
So before those demand zones were formed, when you saw price kind of break right there at 87.90, just a little bit on the 1 hour, would that, I mean, looking at it, now that we're reviewing it, like, would that have been a clue that might have given you, oh, wait a minute, we did break, maybe we should wait?
Yeah, yeah. I mean, that's definitely a fair point there. Yeah, so I mean, again, like I said, probably the only criticism that I could have really had here was that maybe I got in a bit early. You know what I mean? Maybe I should have waited for it to break the upper daily pivot area. But I mean, sometimes you're like, hey, you got this uptrend, you're looking long, it gives you what you want, and you kind of jump on board. You know what I mean?
For sure.
And by the way, hey, I've been loving the way you've been doing well, man. Hey, keep it going. Keep it
Thank
rocking.
you, man. No, I appreciate it, man. Thanks.
No worries. All right. So, hey, Vincent, thank you. Okay, we've got 2 more to go. We're going to do a little trade review here, or a trade plan review, which is real simple to me. What I like to see on a trading plan, I forget whose this was, by the way. Yeah, so here's the thing. Trading plans, oftentimes, whenever somebody asks me, can you review my trading plan? Guess what? It's usually just a regurgitation of everything they learned. I don't like to see that. I like to see this. I like to see what this trade plan does. And I forget who this was. I love this because it not only says why I trade, but what my strengths are, where I can improve. But most importantly, guess what it has? I tell people this all the time in various different ways. SOP, right? SOP. What's SOP for? I don't know if there's a. Oh yeah, this is in your documents, right? Standard operating procedure. Love that. You know why I love that? I love that because it tells you what you should be doing. This is the T part of that equation. I like it. Conditions to enter a trade, conditions not to enter the trade, standard operating procedure. Perfect. That is a very clear, concise. This page right here is what you guys should have printed out, sitting in front of you. And if you need to read it every single day, read it every single day until it's completely automatic. This is perfect. I love this trade plan. There isn't anything that I have that would, the only thing I thought when I looked at this trade plan was looking at a lot of markets for newer beginning traders. And I don't know, I can't remember whose trade this is. I don't recommend looking at that many markets most of the time. I usually recommend, maybe like 5 to 6 to start with, maximum. That way you can focus on getting better and then add to it if you need to. But this is an excellent trade plan. I mean, there's a few things in here. If where was I looking at? If neither one stopped, hit move. Yeah, I mean, it's telling you when to get out, log the trade. Where was I looking at it? Yeah, I even like this. I'm not mentally sharp. Get out. I like this. Yeah. So here's the thing I would suggest too, by the way, when you have a trade plan like this, each one of these conditions to enter a trade are rules, correct? Could you track that on a spreadsheet? Could you track those as rules on a spreadsheet? Yes, you can. And that's another way you can get better. Another way that you can get better.
Hey, Justin, if I can throw in there Vincent put it in there, the trade optimization plan, which is a super simple worksheet that we use for people to just kind of go through and follow a trade. What I tell people is if they're struggling 100% of the time, go through a checklist that you got to follow and score the trade, whether you call it a trade optimization plan. Some of you use a way to enhance your odds. Maybe you use a score sheet like that. But having, and the trade optimization plan is the one that we put together that's a lot simpler. But the point is that if you don't have a follow through standard operating procedure plan to follow in order to measure the probability of success, it doesn't make sense to do the trade.
Absolutely. Absolutely. That's all right, Petra. You can yell. Okay. All right. Last thing as we rock off. So we had, actually, I recognize this. I recognize this person here. So just a little inquiry. Person had a lot of questions on this. I'm going to address just a couple things on this. So what I understood of this is there's a couple questions on this, and I think this benefits everybody. So this is the Caleb here. So looking at this particular setup, what's the differences on these zones? So take a look at when you come down here. So let's first, can everybody see this just fine? Make that as big as we can here. Okay, take a look at this. So what do you see when you say so? This student was asking about these zones here. What's the difference between these? A and B are both are one's a zone, one's not a zone. Everybody see that? Okay. A is a zone, B is not a zone. Why is A a zone, but B is not a zone? B is just a pivot into a prior zone. Does everybody see this? In other words, drop, base, drop, base, drop. Pivot back to it, a retracement back to it, dropping weight. Now, here's the thing. If this drops, for it to be considered a strong area still, it needs to push past here. Why? The excess or imbalance that dropped it from this battle area, okay, pushed it that far. If the retracement only pushed it that far, then we don't have any new sellers coming in. Does everybody understand that? We just have residual sellers getting used up. Does everybody understand? So when it comes back to here, we could take a confirmation here. However, it's more than likely going to probably base here. If it bases here and then rallies above, that's your breakout point. Does that make sense, everyone? Okay, good. The other question was here is that the difference between these zones. Again, it's this, look at the subtleties. This is a battle that was won by the buyers. So point B was a battle. Why? Rally based, that's a battle point. Boom. Okay. Then what's A? A is not necessarily that same thing. Why? What happened? We kind of fell back. Notice how it fell back here and then rallied. So we could treat this as a zone, but isn't this the fair price value area here? Isn't this kind of pulling back to the fair price value area here? Yeah, right, Philip? Yep. So in other words, to me, this is the basing. This is where the battle is being fought. This is kind of dipping back into that battle. Right now, you could include the whole thing if you're going to take a trade there, but those are the subtle little differences that I kind of see there. Yeah, fair price value area, John, where the buyers and sellers are basically fighting or agreeing on the price. Yeah, and by the way, if you buy at B, the trend may be completely different at that point, right? Okay. All right, Chuck. You're on, buddy.
Awesome. Well, that's that's all. I don't have anything more to add from that perspective. I did want to make a real quick announcement. So thanks for taking the time, Justin. I'm not sure how often we want to do these, Justin. This is going to be kind of up to you as to when we want to schedule these trade review sessions. I'd love you guys to throw in the chat box or in the window how often you'd like to see these happen. But understand, we love you all dearly, but we also like to spend time with the family. So when we can get them on there, we'll get them on there, and we'll see how it works. So real quick, I wanted to make a quick announcement. I was actually speaking to one of our members, Doug. A lot of you guys know Doug really well. He's become, not only is a member, he's one hell of a guy, really good friend. And he asked me about if we could do something, especially around for veterans. And especially as we head into Memorial Day, and I was thinking about, kind of what we could do. And so if you guys know of, or you're interested in hearing more about it, we're going to do a veterans promo for all, and Doug is, for those of you guys that know Doug, he's a veteran, served many tours, did a lot of great things. We're going to do a veterans, sort of for veterans, active military, and first responders. And we're doing a 75% off promo for this month. So 75% off, as well as the trade plan class complimentary. So if you know anybody, if you think somebody might want to do it, it's just have them sign up using the promo code HEROES. Like, once again, veterans, active military, first responders, we're literally doing 75% off, and the trade plan class. Trade plan class is scheduled for June the 6th, I think it is. It's the first Saturday in June. So I want to make sure you guys knew that, and it was out there for everybody to hear. But that's all I got for today. I hope you guys enjoy the rest of your Saturday. Justin, thank you for doing this, man. I really appreciate it.
No worries. And hey, thanks for joining us, guys.
And I'll type the link in. There's the link to the website. I put it in the chat box. Like I said, promo code HEROES, and you can get jump on that dealio. It'll be for the whole month. All right. Thanks, everybody.